Today, we saw stocks come crashing lower, and essentially there was nowhere to hide from the sea of red. We look at the fear and greed index, almost back over into fear territory, teetering right on the edge. And we look at the most recent investor sentiment survey, the bulls are out there 39.5%, up slightly from last week, and the bears have also increased as well. So some of the participants that were in the neutral category last week now jumped ahead on the bull side. Now the question is, are they wrong? As we have a lot of things to worry about in this stock market. Now we come over and look at how the indices fared across the board. The Dow was down 378 points. NASDAQ was down 512 points. S&P 500 down 108 points. Russell 2000 down 3.77. Now we look at advancing issues versus declining. We had 75% of issues declining on the day. Then we come over and look at the sectors. The only two sectors in the green, utilities followed by energy. Now, why was energy in the green today? Was very simple. We look at this article that came out right here. Iran prepares major retaliatory strike from Iraq within days. At least that's what Axios is saying. And we look at a chart of crude oil, we can see when that news article hit, crude oil went rocketing up to the moon. Now we look at crude oil here on the daily chart, we can see that first gap we were talking about last night has now been filled. Now the question is, will crude oil continue to climb the wall of worry coming up and fill in the secondary gap up here at 73.84. We look at the dollar index today. Dollar index continued to roll over here just a bit. Then we see gold futures absolutely get smacked down 43 points on the session. Now we can see right over here, gold already completed its ABC pattern on the way up. So now, are we going to start to get that knee-jerk reaction on the way back down? Will we make it down towards 27.16? This area right here would be my next area of interest if indeed gold is going to continue to pull back from this price point. Now today, we had a little bit of economic news come out. And when we look right now, key inflation rates hit 2.1% in September as expected, closing in on the Fed's target. Now, if that news was supposedly so good out there, then why do we see all the indices absolutely getting destroyed, gapping lower and continuing to push lower throughout the day? Even if we come over and we take a look at stocks like Amazon came gapping lower today. However, after the bell, we see Amazon on the move back up higher. And we can see right here, Amazon's earnings, stock rises after Q3 results. And we're going to see, we are still waiting to see Apple's results. Will Apple's results move the stocks bullish or move them back bearish? Now we come over and look at the king of AI. NVIDIA was down 4.85%. And across the board, there was nowhere to hide. Microsoft gapping down huge after yesterday's earnings announcement. And the question is, has the market topped out? Is this all she wrote? And we're about to go substantially lower. Well, if we come over and we take a look at the diamonds real quick, we can see we've had that gap lower today. Now we're starting to get into that minus development area. Are we going to continue to see indices push lower from here? As we look at the MACD indicator, still has a bearish cross to the downside, showing us there could be a lot more room to run to the downside. Then we jump over and we look at the small caps, a bearish candle out here today. And we can also make the assumption that we're going to have this A to B equals C to D pattern that completes down here at about 214.65. Now we dive down and start looking at the 30-minute chart, and we still see the MACD indicator still cross to the downside. As we broke this recent intraday low, you can see the MACD indicator is still piling lower, showing no signs of firming up just yet. Now we come over and look at the economic calendar for tomorrow. It's going to be a big one. We have the average hourly earnings coming out. We have the non-farm employment change. We have the unemployment rate all coming out at 8:30. And just wait, that is not all. Coming out at 10 a.m., we have ISM manufacturing PMI, ISM manufacturing prices. So tomorrow we have a lot of potential news as well, along with we are still in the midst of earnings season. Now to round things up after the bell day, we had Amazon, Apple, Intel, to name a few. We have Exxon and a few other companies reporting earnings tomorrow. So we're going to see, can the market recover from all the damage that has been done out here? Now looking at the cues on the daily chart, you can see we have this gap lower, and we're now getting back below this upper level consolidation coming into this high volume area of the profile. Now, if we continue to melt lower, one of the areas I do want to watch is going to be about 278.06. Now, today they absolutely gave it up. If we look on the 4-hour chart, MACD indicator just crossed to the downside. We look on the 1-hour chart, MACD indicator is way buried below the zero line. And we come over and look at the 30-minute chart. Notice, all right, we're trying to firm up here just a bit. Could a bounce be around the corner? We look at the profile shape. We have a B as in boy shape profile. Now, one of the areas I do want to focus on is going to be this minus development area. If indeed we're going to get a bounce, that's going to be anywhere from 488.48 to about 489.64. However, if we cannot get back above value area high, there's no need to worry about higher prices. We simply have nothing to worry about from that point on. Now, I want to remind everybody, there's only hours left to take advantage of Apex's 80% sale off all their evaluation accounts, $85 activation fee across all account sizes. If you'd like to take advantage of this offer, use the link in the description box down below. Use promo code Mike at checkout. Now, as we come over and we look at the futures markets real quick, right? Look at this on the 4-hour chart. We have had 8 consecutive down candles in a row, and that's something we were talking about today during the live stream. If you want to make sure you don't miss the next live stream, make sure you're subscribed and the bell notification turned on for all. But today was not a good day of trading. It was essentially a train wreck for me, but at some point, we will start to see a bounce back up. So far this week, we've had a 780 point range. And if you notice, we have quite a few minus development areas within the profile that at some point is likely going to come back and get tested. And if you look up here, we have a structure breakdown point, which is miles away at this moment. We come over and we look at the daily profiles real quick. And one of the areas we're watching for was going to be this developing point of control. Well, that level has already been taken out. And we have this minus development area above us, along with a structure breakdown point. Now, the minus development area is really anywhere from about 20,206 up here to about 20,252. The next structure breakdown point would be about 20,286 up here to about 20,306. Now, when we look at the volume profile levels, keep in mind, value area low is down here about 20,011. The point of control is going to be about 20,070.25, and value area high is going to be about 20,178.00. Now, tonight, if we start flushing below value area low, then we can turn and get back up. Then I would want to go ahead and try to play for some of those moves on the way back up. But again, I want to caution you with the tensions potentially brewing in the Middle East, and the fact that we're starting to get a slap down in the market, we might want to pay a little bit closer attention, right? Be very, very careful, because this market could basically come unglued. We have been up on thin air. When we look lower, let's not forget on the 4-hour chart, we do have an untested point of control at 19,664.75. Now, as we come over and look at the SPY, we also had that gapping lower out here today. Off that upper level consolidation, we made it to this high volume area, not quite down towards the minus development area at about 565. Now, I got to be honest with you, we went a little bit further down today than I thought we would. MACD indicator is crossed to the downside. We look out here on the 4-hour chart though, and what do we see? The gap lower, and we just continue to drift lower throughout the day. Basically, no bulls were in sight. We look out here on the 1-hour chart. You can see MACD indicator is absolutely horrible looking. Then we look out here on the 30-minute chart. You can see the MACD indicator trying to flatten out here just a bit. Now, I would classify this as a B as in boy shaped profile. And with this being said, if we break value area high, we're likely going to explore the upper third of the range. Keep in mind, we have a large gap as well. So maybe gap resistance could be in play sometime tomorrow, depending on how the market reacts to the rest of the earnings we have coming out and the economic data coming out tomorrow morning. As we jump over and we take a look at the futures markets, what do we have? Well, it was absolutely bloodbath out here. And with the S&P, we actually have 9 consecutive red candles out here at this moment. Now, this candle will be closing at 5 o'clock, so we have a little bit of time left on the clock. However, notice the minus development areas within this profile. We had very poor market structure, anywhere from about 57.70 all the way up here towards this structure breakdown point at about 58.37. Now, something we've been talking about for quite a while now was this double top pattern, and we actually completed that pattern today. If we go ahead and we measure out where that pattern completes at, we can see it was right down here about 57.71, actually to about 57.80, depending on which swing point you pulled the measurement from. And you can see we crushed that, and we continued much, much lower from that point on. You can see some of the levels we already had marked off. Now, we do have a minus development area right up here. That comes in about 57.73. We also have this minus development area up here, which comes in anywhere from 57.89 and a half to about 57.93. Now, anything above that, we do have a structure breakdown point, which is basically, if you look on the 30-minute chart, candle wicks to the candle bodies. If we start to get a strong bullish push, this could be an additional target for us as we move forward. But today the range was 109 points. And to put that in perspective, the average ATR is essentially 53 points for the S&P 500. So we well extended way past that out here. Now, when we look at the volume profile levels, 57.78 and 3/4 will be value area high. The point of control will be 57.61.75. Value area low is going to be down here at 57.34.50. So tonight, or maybe Apple's earnings come out, we flush below this low, value area low, and then we start coming back up. Then I want to target some of those areas. But again, we got to be cautious, all right? The market has been consolidated for quite some time out here on the daily chart. And at some point, once we break, watch out. That could be the start of a huge move in the markets. And just to put this in perspective, from the high to the current price where we're at now, this has only been a 3% correction. A 10% correction would bring us all the way down here towards this next high volume area right down here on the profile. And that's going to be a substantial drop if indeed that does take place. Keep in mind, next week, we will be going to the polls for elections. So maybe that provides a little bit more volatility for the markets as well. Now, if you guys like to learn about my fund and futures approach to direct funding, watch this video right here.